How come Wall Street ignored Trump's trade war fears overnight? Property investors, hey, they're not really parasites. And Shorten is delivering dividends like you've never seen before. And what do you buy before the election? And finally, we will draw the winner of the 2-trip tickets to LA, which we put out there for the Strategy Day last week. I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.
All right, Paul, how come? I woke up this morning thinking the Dow would be in the red and it was in the green. What happened?
Look, I think they're like us, Peter. They all think eventually Trump will do a deal. And so the market goes down, sells off 2 or 3%. We get a sort of a 1/3 retracement yesterday. Look, the hope is everyone expects he's the game player. He wrote The Art of Doing a Deal, and I guess at some stage we all hope it's going to turn around. That's what the market thinks.
But hope is not a strategy.
It's not a strategy, but he is President T, and
he's unusual guys.
It'll play out. So look, this thing is going to be a negative for the market until it's done. But look, I don't know, Peter. I mean, I can't sort of get too excited at the moment. But
yeah, I can't blame him. Look, I'm a trained economist, but I'm not a trained psychologist. And with him, you need to work out his unusual psychology. Anyway, let's keep the fingers crossed that the trade deal happens and the market goes up. Now, great story in the AFR today. Property investors, believe it or not, Paul, are not parasites.
Well, that's a big thing for the Fairfax press to admit.
Okay,
Peter.
it is.
Right?
But let me tell you what. So, some research has been done by the Property Investors Council of Australia, which some people might say is like the union for property investors and developers. But what they've actually shown is that for an average house, for an average loan, for an average income person, they'll get deductions around $30,000 over an 11-year period, right? But when they come to sell this place with a 6% per annum gain, they would actually end up giving $80,000 in capital gains tax to the government. Close to 3 times what the deductions were. So in a sense, even though they're perceived as being parasites, this capital gains tax goes to the government, is then shared with all the other welfare recipients out there, and business as well.
So they're actually helping the economy.
Exactly, over time. But there's a classic case that people who criticise one side for taking never ever calculate what's the giving part of it. I was surprised that the difference was 3 times, but I'm happy to report it.
I'm also surprised, Peter, the whole negative gearing debate is how little the tax deduction is. I mean, it's only $3 or $4 billion.
Yeah.
So it's actually a drop in the ocean. It's as though property investors are gouging the system.
Parasites.
It's parasites. It's not the case. So, look, in the scheme of things, I mean, look, these things will wash through, but look, I guess, again, that's what we happen if we get a change of government on Saturday, which looks likely. So let's get used to it, Peter. But they're not parasites. They could go to sleep feeling a little better, right?
The next topic, and this is a carry on from what we said before. Everyone's, and I've been included, have bagged Bill Shorten for various policies, but that's the taking bit. The giving bit from Bill is he's actually encouraged companies to give dividends. We've been running dividends ever since Bill mentioned the changes in capital gains tax.
And a big one from Fortescue, another special dividend from Fortescue of 60 cents per share. I think it's almost about $1 billion. I mean, this is again.
Explain why companies are doing it, and thank Bill for it.
Because
thanks, Bill.
Effectively, the start date for the change is 1 July. Now, it works on a tax year basis, but for the 18-19 tax year, excess franking credits will still be refundable. For the 19-20 tax year, if the legislation goes through as currently conceived, excess credits won't be refundable. So if you're a company sitting on a pool of franking credits, remember, franking credits are of no value whatsoever.
Explain to our viewers how come companies are sitting on franking credits.
Simply because for every $1 of company tax they pay, they get a franking credit, $1 worth of franking credit.
They pay 30%.
If historically they haven't paid out all their profits in dividends, which most companies don't because they keep some retained earnings, they build up a pool of franking credits.
Yes.
They're of absolutely no value to the company because it's not worth anything to the company. Yeah. It's only worth something to the shareholder.
Just proof that they pay tax.
Yeah, it's only worth something in the hands of the shareholder. Yeah. And of course, if you change the system so that franking credits become less valuable to a group of shareholders, what happens is a lot of companies bring forward the payment of their dividends. So we've seen.
Thank you, Bill.
We've seen Bill cause a dividend flurry. We've seen a huge increase in off-market buybacks. Don't forget the Woolworths off-market buyback closes the end of next week, so you've still got some time there. That's why companies like Woolworths Woolworths, BHP, Rio, Caltex have done off-market share buybacks. A lot of companies, such as companies like Westpac, brought forward the payment of their dividend. ANZ and NAB unfortunately didn't listen to many people. But Fortescue, we've seen special dividends, and that's why Fortescue is paying a special dividend in a week's time. And so it's two things. Thank you, Bill. Yeah. But also, what they seem to forget whenever you change the system is people react. And so they make these assumptions and they say, oh, franking credits cost $8 billion, whatever the number is. What will happen now, of course, is that companies will change their behaviour, shareholders will change their behaviour,
right.
And the actual...
They won't get the tax they're expecting.
They won't get the tax they're expecting. Yeah. This is what happens when you change the rules.
And people like you and me will help people not pay the tax.
And there are lots of strategies. And we've put those strategies in the
Someone's got to do it.
Report this week about what you can do to better manage your franking credit situation post a Bill Shorten government.
Okay, rightio. Now, what to buy, Paul?
Well, this is one of the things that's driving the what to buy question, because we've seen some of the companies that are paying unfranked dividends, companies like Transurban, Sydney Airport, the Property Trust,
income type stocks,
even some of the consumer staples in Woolworths and Wesfarmers, they're going through crazy prices. I mean, it's almost like no one wants to buy banks, bad banks. No one wants, the resource companies are too high.
Bad resources.
Technology, who knows with technology. So there is a real issue with what to buy at the moment. I think some of the stocks are getting really overpriced, Peter. Yes. I just have a bit of caution. I think you've got to be patient in this market. There's a pullback coming. I think when you see Woolworths and Wesfarmers and Coles go up day after day, Telstra going up day after day, you can just get a sense there that people are struggling about what to buy.
And in a slowing economy too,
in a
Paul,
slowing economy.
We're not getting disappointed. Okay, so that's... And by the way, I should say, viewers, Paul actually tipped you should buy a lot of his income stocks. How many months ago was it?
Well, 2 months ago I wrote about the 5 stocks. APA, Transurban, Medibank Private, Coles, and the 5th one was it was in Woodside. There's a bit of an odd one out there. They've all gone up very, very nicely since I wrote that.
In the Switzer report.
In the Switzer report.
If you're not a subscriber, you're probably against being wealthy. But that's your decision. Final one.
Dexus was the other one too.
Okay, we gave away, we promised to give away 2 tickets to LLA to the people who turned up to the Switzer Strategy Day in Sydney, Melbourne and Brisbane. And so we're going to do the live draw of that right now.
We have a trip ticket winner. Is that right?
Yes.
That's better technical alliteration than yours at the start of the program,
okay,
Peter.
Yeah, well, I might have to review that. But that was terrific, Paul. Hey George, hope you got your passport because you're going to LA. Hey George, it's Peter Switzer with an American accent there. How are you, mate?
Good, mate. Yourself?
Very good indeed. Are you happy about winning the prize?
Did I win the prize?
You won the prize, George.
Yeah, fantastic. Who will you take with you, George?
Probably my wife.
Gee. You're in the good books forever with that one, mate. Look, congratulations. We're really happy you attended the strategy day, and we want to give you one big cheer again for being a winner.
Hey!
All right, George, we'll contact you and make sure you get all the details. But once again, thanks for joining us at the Switzer Strategy Day.
So what was it? You'll send me the details by email, will you?
Most definitely, George. And in fact, one of us might insist on coming along with you just for the sake of it. You can dump your wife and take us instead.
Sounds good. So, yeah, appreciate it. Thanks for the call.
Pleasure, mate. Talk to you soon.
All of it. Thank you.
Congratulations, George Margellis, for being the winner of our 2 tickets to LA from the Switzer Strategy Day. I'm Peter Switzer.
I'm Paul Rickard. And we're mad about money.